Right now, 300 million Chinese citizens believe their real estate investments will secure their retirement. They're catastrophically wrong. $65 trillion in property wealth is evaporating. The Chinese Communist Party calls it a soft landing. They're managing the greatest wealth confiscation in human history. Here's what nobody's telling you. This isn't a real estate crisis. It's a wealth transfer mechanism, and it follows a pattern that's been executed successfully for over 2,000 years. The same four-stage pattern that destroyed the Roman middle class in 301 AD. The same mechanism that transferred wealth in Weimar Germany in 1923. The same system that consolidated power during every major currency crisis in recorded history. This isn't speculation. This is documented fact. The Chinese government just executed stage 3 of this pattern. And if history is any guide, stage 4 completes within 24 to 36 months. You know what the difference is between what's happening in China right now and every other wealth transfer event in history? Scale. China's middle class is larger than the entire population of the United States and Europe combined. We're watching the simultaneous impoverishment of more people than have ever been impoverished at once in human history. And here's what should terrify you. The mechanism being used isn't unique to China. The pattern is universal. It's mathematical. It's already being deployed in Western economies. If you stick with me for the next 20 minutes, I'm going to show you exactly how this pattern works. I'll walk you through the historical examples with specific data. Then I'll show you what's happening in China right now, using numbers the state media won't discuss. By the end of this video, you'll understand the mechanism. And once you see this pattern, you can't unsee it. Let me show you the evidence. Every wealth transfer in history follows the same four-stage pattern. It doesn't matter if we're talking about ancient Rome or modern China. The mechanism is identical. The outcomes are predictable. Stage 1. Foundation and trust building. This is where the system gains legitimacy. A government or central authority creates a new currency, a new economic system, or revalues an existing one. They back it with something tangible. Gold, silver, land rights, industrial capacity. The key is credibility. People need to believe their wealth is secure. This stage usually lasts decades, sometimes generations. It has to. Trust takes time to build. Stage 2, expansion and debasement. Here's where it gets interesting. The authority begins expanding the system beyond its original constraints. They print more currency than they have backing. They issue more land rights than there is land. They create credit beyond actual assets. Why? Because it benefits the elite initially. Cheap money flows to those closest to the creation source. The connected class gets wealthier. The masses see rising asset prices and feel prosperous. Warning signs appear. Inflation starts creeping. But people ignore them because nominally, everyone's getting richer. Stage 3. Loss of control and crisis. This is the critical stage. The cracks become too obvious to ignore. Currency loses purchasing power rapidly. Asset bubbles burst. The middle class, which accumulated wealth in the inflated assets, suddenly realizes their wealth was an illusion. They panic. They try to liquidate. But there's no liquidity. The elite, meanwhile, have already repositioned. They saw stage 3 coming because they always do. They've moved wealth into hard assets, foreign currencies, or government bonds. They're protected. Stage 4, reset and consolidation. The final stage is where the actual wealth transfer occurs. The system either collapses completely or gets reformed. Currency revaluation, bank closures, asset seizures, debt jubilees that favor institutions over individuals. When the dust settles, the middle class has been obliterated. The elite have consolidated even more power, and a new stage 1 begins. This pattern has repeated for over 2,000 years. Documented, verified, every single time. The same 4 stages. Every single time, wealth flows from the many to the few. You're watching stage 3 execute in China right now. And if you understand this pattern, you can position yourself accordingly. Let me prove it to you with history. Rome, 301 AD. Emperor Diocletian faces a crisis. The silver denarius, Rome's primary currency for 500 years, has been debased so aggressively that it's lost 99.5% of its silver content. Inflation is catastrophic. The Roman middle class is being destroyed. Let me walk you through exactly how Rome executed all 4 stages. Stage 1. Foundation, 27 BC to 64 AD. Augustus establishes the denarius as the gold standard of Mediterranean commerce. The coin contains 95% silver. It weighs 3.9 grams. It's accepted from Britain to Egypt. For nearly a century, it's stable. Roman citizens accumulate wealth in denarii. They trust the system. Merchants price goods in denarii knowing the value will hold. The middle class flourishes. Rome's economy expands. This is the trust-building phase. Stage 2. Expansion and debasement, 64 AD to 235 AD. Emperor Nero needs to fund his building projects and military campaigns. He reduces the denarius silver content from 95% to 90%. A small change. Nobody panics. Over the next 170 years, successive emperors continue the debasement. By 218 AD, the denarius is only 43% silver. By 270 AD, it's 0.5% silver. It's basically a bronze coin with silver wash. But here's what's crucial. For most of this period, Romans don't realize what's happening. Nominally, prices rise slowly. Their wages rise too. The wealthy, who have connections to state contracts and land ownership, actually get richer. The military gets paid first with the new coins before debasement is obvious. The middle-class merchants and farmers see their grain prices increase and think they're prospering. They're not. They're being robbed through debasement. Stage 3. Loss of control, 235 AD to 284 AD. The crisis period. Rome enters what historians call the 3rd century crisis. In 50 years, there are over 50 different emperors. The military keeps demanding higher wages to fight barbarian invasions. The government keeps debasing the currency to pay them. By 268 AD, prices are doubling every single year. A loaf of bread that cost 2 denarii in 250 AD costs 200 denarii in 270 AD. But wages aren't keeping pace. The middle class, which accumulated wealth in denarii savings, watches their purchasing power evaporate. Here's the critical part. The wealthy elite saw this coming. They converted their wealth into land, foreign currency, or gold. The Roman senator Cassius Dio documented this explicitly in his histories. He writes that by 260 AD, the senatorial class was conducting trade in gold weight, not denarii. They'd already escaped the debasement trap. The middle class had no such escape. Their wealth was trapped in the dying currency. Stage 4. Reset and consolidation, 284 AD to 310 AD. Diocletian takes power in 284 AD. He implements the Edict on Maximum Prices in 301 AD. Price controls across the entire empire. Over 1,000 goods and services with fixed prices. Violation meant death. It fails spectacularly. Merchants stop selling goods rather than sell at government prices. Black markets emerge everywhere. The economy collapses further. But here's what actually happens during this chaos. Massive land consolidation. Small farmers, unable to pay taxes and the worthless denarii, default on their obligations. Large landowners who have hard assets and gold buy up property at pennies on the value. By 310 AD, the Roman middle class of independent farmers and merchants has essentially ceased to exist. The wealth transfer is complete. Estimates suggest that between 270 AD and 310 AD, over 60% of productive land in Italy transferred from small holders to large estates. The senatorial class increased their wealth by multiples. The middle class was obliterated. Diocletian's reforms didn't save the middle class. They consolidated the wealth transfer. When Constantine introduces the solidus gold coin in 312 AD, it's a new stage 1. But the middle class that existed in 250 AD is gone. The wealth has been transferred. Now let's see this exact pattern execute again. Same 4 stages. Different century. Same outcome. Germany, November 1923. A loaf of bread cost 200 billion marks. 1 month earlier, it cost 20 billion marks. The German middle class, the most educated and productive in Europe, is being systematically destroyed. Their savings, their pensions, their bonds, worthless. This is the most documented wealth transfer in modern history. We have exact numbers, specific dates, named individuals, and it follows the exact same 4 stages as Rome. Stage 1. Foundation, 1871 to 1914. The German gold mark is established in 1871 after unification. It's backed by gold at 2,690 marks per kilogram. For 43 years, it's one of the most stable currencies in the world. The German middle class flourishes. They save in marks. They buy bonds denominated in marks. German government debt is considered as safe as British consols. By 1913, Germany has the world's second largest economy. The middle class owns substantial savings. Estimates suggest over 10 million German families have accumulated meaningful wealth in mark-denominated assets. The system has credibility, total credibility. Stage 2, Expansion and Debasement, 1914 to 1921. World War I begins. Germany abandons the gold standard in 1914. They need to fund the war. The Reichsbank begins printing marks without gold backing. During the war, the money supply increases from 5.9 billion marks to 50 billion marks, an 8x increase. But here's what's crucial. During the war, price controls hide the inflation. The government rations goods. They fix prices. The middle class doesn't realize their marks are being debased. They're buying war bonds, believing in the state's ability to repay. Germany loses the war in 1918. The Treaty of Versailles demands 132 billion gold marks in reparations. Impossible to pay. The government's solution? Print money to buy foreign currency to pay the reparations. The Reichsbank printing presses run continuously. By 1921, the mark has lost 90% of its value against foreign currencies. But domestically, prices are still somewhat stable. The middle class still trusts their savings. They still believe the marks in their bank accounts represent real value. They're wrong. Stage 3. Loss of control, 1921 to 1923. This is where the crisis accelerates beyond control. In January 1921, 64 marks equal $1. By January 1922, 192 marks equal $1. By January 1923, 18,000 marks equal $1. By November 1923, 4.2 trillion marks equal $1. Let me make this concrete. In 1913, a successful German doctor earns 10,000 marks per year. By 1923, a loaf of bread costs 200 billion marks. That doctor's entire annual salary from 1913 wouldn't buy a microscopic crumb. The German middle class is obliterated in real time. Families that accumulated 50,000 marks in savings, enough to live on for 5 years in 1913, can't buy a week's groceries in 1923. Pensions become worthless. Life insurance policies become worthless. Government bonds become worthless. But here's what the elites are doing. They're borrowing massive amounts of marks and buying hard assets. Industrial equipment, real estate, foreign currency, commodities. Hugo Stinnes, a German industrialist, becomes one of the wealthiest men in Europe during this period by taking on debt in marks and acquiring physical assets. By November 1923, Stinnes controls over 1,500 companies. He borrowed worthless marks and bought real assets. The middle class did the opposite. They saved worthless marks and watched their wealth evaporate. Stage 4, Reset and Consolidation, 1923 to 1924. The German government introduces the Rentenmark in November 1923. 1 Rentenmark equals 1 trillion old marks. The hyperinflation stops immediately. The currency stabilizes. Problem solved? No. Wealth transfer completed. The middle class has been destroyed. Their mark-denominated savings are gone. Their bonds are worthless. Their pensions are worthless. But the elite who accumulated hard assets during the crisis, they're wealthier than ever. Research by economic historians shows that between 1914 and 1924, approximately 75% of middle-class wealth in Germany was transferred to either the state or the industrial elite. The middle class that existed in 1913, shopkeepers, doctors, lawyers, civil servants, was financially obliterated. The Rentenmark introduction is the new stage 1, but it's building on a completely different wealth distribution. The people who held power before the crisis have even more power after. The middle class has to start from zero. Same pattern. Stage 1, trust. Stage 2, debasement. Stage 3, crisis. Stage 4, reset and consolidation. Notice something. In both Rome and Weimar, the middle class made the same mistake. They trusted the currency. They kept their wealth in the system. They believed the authorities would protect them. The elite made a different choice. They recognized the pattern. They positioned themselves accordingly. Which brings us to today, to China, where the exact same pattern is executing right now, and the numbers are staggering. China, 2024. The second largest economy in the world is executing stage 3 of the pattern, and the scale is unprecedented in human history. Let me show you exactly where China is in the 4-stage cycle and why stage 4 is inevitable. China is deep into stage 3. The cracks are no longer cracks, they're canyons, and the Chinese middle class is watching their wealth evaporate in real time. Here's where we are. Between 2000 and 2021, China executed the most aggressive stage 1 and stage 2 cycle in modern history. Now we're in stage 3, and the data is screaming. Chinese household wealth is 78% allocated to real estate. That's not a typo. 78%. In the US, it's 35%. In Europe, it's 40%. Chinese families put nearly 80% of their wealth into property. Why? Because for 20 years, property only went up. From 2000 to 2021, average property prices in Tier 1 cities increased by 650%, in Beijing by 800%, in Shenzhen by 1,000%. The Chinese government explicitly encouraged this. They needed property development to drive GDP growth. They needed banks to lend against property. The entire economic model depended on rising property values. The middle class responded rationally. They bought property, multiple properties. They went into debt to buy property. They convinced their families to pool resources to buy property. By 2021, over 90% of urban Chinese families owned property. Many owned 2 or 3 units. That's $65 trillion in total residential property value. Trillion, with a T. Now here's what's actually happening. Since 2021, property values in major Chinese cities have fallen between 25% and 40%. But these are official numbers. The real numbers are worse because there's no liquidity. You can't sell at any price. Evergrande, China's second largest property developer, defaulted on $300 billion in debt. Country Garden, the largest developer, is in default on $200 billion. Dozens of smaller developers have simply stopped building. There are an estimated 20 million pre-sold apartments that will never be completed. 20 million families paid for apartments that don't exist. The Chinese middle class just watched 25% to 40% of their net worth disappear. But it's worse than that, because they can't access the remaining 60%. There are no buyers. The market is frozen. Here's the mechanism that makes this a wealth transfer, not just a crisis. Chinese homebuyers borrowed heavily to buy property. The average mortgage debt-to-income ratio for Chinese families is 65%, higher than the US in 2006 before the subprime crisis. These families are still paying mortgages on properties worth 30% to 40% less than they paid. Many are paying mortgages on properties that don't exist and never will. And Chinese mortgages don't have the same protections as Western mortgages. You can't just walk away. The debt follows you. Reports indicate that by 2023, over 2 million Chinese families have simply stopped paying their mortgages. The mortgage boycott movement. But the banks aren't absorbing these losses. The Chinese government is making sure of that. Instead, the government is forcing banks to extend credit to developers to finish projects. They're forcing local governments to buy up unsold inventory. They're creating asset management companies to buy distressed properties. Who funds these entities? The central bank, through newly printed yuan. See the pattern? The middle class loses wealth. The banks stay solvent. The debt is socialized. The losses are individualized. Now let's talk about what the elite are doing, because this is where you see stage 3 transitioning towards stage 4. Capital outflows from China have accelerated dramatically. Data shows that between 2021 and 2024, over $2 trillion in private capital has attempted to leave China. The government has responded with increasingly aggressive capital controls. The limit on foreign currency conversion is $50,000 per person per year. But wealthy Chinese are finding ways around it. They're buying foreign real estate through shell companies. They're using cryptocurrency despite the government ban. They're utilizing underground banking networks. They're moving manufacturing to Vietnam and Thailand and keeping profits offshore. The wealthy Chinese are following the exact same playbook as the Roman senators and the German industrialists. They're moving wealth out of the system before Stage 4 locks them in. Meanwhile, the middle class is trapped. They can't move significant capital out. Their wealth is frozen in illiquid property. They're still paying debt on devalued assets. Let's talk about what's happening to the yuan, because this is the mechanism that completes the wealth transfer. Since 2020, China's M2 money supply has increased by 42%. That's faster than the US, and the US printed aggressively during COVID. The People's Bank of China is printing yuan to keep banks solvent, to fund local government debt, to prop up state-owned enterprises. But here's what makes China different. They're experiencing simultaneous property deflation and currency debasement. Property prices are falling, but the money supply is expanding. This creates a toxic combination for the middle class. Their property wealth is evaporating. Their yuan savings are being debased, and they can't escape to hard assets or foreign currency because of capital controls. The official inflation rate in China is 0.2%. That's what the government reports. But food prices are up 8%. Energy prices are up 12%. The things people actually need are inflating while their asset values are deflating. Here's where it connects to the broader pattern. China's government knows they're in Stage 3. They're not blind. They're actively trying to manage the transition to Stage 4 in a way that preserves Communist Party control. One mechanism: resource securitization. China has been aggressively accumulating hard assets globally. Gold reserves have increased by an estimated 20% since 2020, though the real number is likely higher because China underreports. They've locked in long-term commodity supply agreements with Russia, Iran, Saudi Arabia, and African nations. They're accumulating strategic petroleum reserves. They're stockpiling rare earth elements beyond any reasonable industrial need. Why? Because they're preparing for Stage 4. When the reset comes, they want to revalue the yuan against something tangible. Not gold necessarily, but resource access and industrial capacity. The Chinese middle class doesn't have access to this protection. Only the state does. Here's how all these elements connect and multiply. Property wealth evaporating means families cut consumption. Reduced consumption means businesses fail. Failed businesses mean unemployment rises. Unemployment means more mortgage defaults. More defaults mean more pressure on banks. Bank pressure means more money printing. More money printing means currency debasement. Currency debasement means imported inflation. Inflation means less purchasing power. Less purchasing power means more asset liquidation attempts. Liquidation attempts meet no liquidity. No liquidity means more wealth destruction. These aren't isolated events. They're interconnected parts of the same mechanism. They create feedback loops. They multiply. They accelerate. This is Stage 3 executing in slow motion. It looks like a series of policy responses and market adjustments. It's actually a systematic wealth transfer from the Chinese middle class to the Chinese state and the connected elite. The pattern is undeniable. The outcome is inevitable. Stage 4 is coming. So what does this mean for you? Whether you're in China, the US, Europe, or anywhere else. Because this pattern isn't confined to one country. Inflation expectations need to be completely recalibrated. The idea that central banks have inflation under control is an illusion. When China completes Stage 4, it will involve either a major currency revaluation or a debt restructuring that ripples globally. China holds over $3 trillion in foreign reserves. If they're forced to deploy these reserves to manage a Stage 4 reset, it will impact global currency markets. The dollar, the euro, the yen, all will be affected. Currency debasement is accelerating globally. It's not just China. The US M2 money supply has increased by 38% since 2020. Europe's by 32%, Japan's by 26%. Every major economy is printing to manage debt levels that are mathematically unpayable. The middle class in every country is facing the same fundamental threat. Their savings are in currency that's being debased, and their assets are in bubbles that are increasingly fragile. Asset prices in the near term will be volatile. Stocks, bonds, real estate, all will experience wild swings as Stage 3 plays out globally. The traditional 60-40 portfolio allocation isn't designed for this environment. Purchasing power trajectory is down. For everyone. The question isn't whether your currency will lose purchasing power. The question is, how fast and how much? Let's be direct about what the wealthy are doing right now. They're diversifying out of single currency exposure. They're accumulating hard assets. They're gaining exposure to scarce resources. They're building optionality. They're not timing the market. They're recognizing the pattern and positioning for Stage 4 regardless of when it completes. Could be 18 months, could be 5 years, but they're not waiting to be certain. What should the average person understand? Traditional financial advice is built for Stage 1 and Stage 2 environments. Buy and hold. Diversify across stocks and bonds. Keep cash reserves. This advice assumes currency stability and asset appreciation. We're in Stage 3. The rules are different. Why traditional advice may fail. Bonds lose value and currency debasement. Cash loses purchasing power. Stocks can rise nominally while falling in real terms. The middle class thinks they're being conservative by holding balanced portfolios. They're actually exposing themselves to the same trap as the Romans holding denarii and the Germans holding marks. Contrarian approaches to consider. Understanding that wealth isn't the same as currency. Wealth is claim on productive assets, scarce resources, or essential goods. Currency is just the medium of exchange. During wealth transfers, currency loses value. Assets shift in relative value. The key is holding wealth in forms that survive the transition. This is not prediction. This is pattern recognition. I've shown you Rome. I've shown you Weimar Germany. I've shown you what's happening in China right now. Same 4 stages, same mechanisms, same outcomes. The only question is whether you understand clearly enough to position accordingly. By the time this becomes obvious to everyone, by the time Stage 4 is undeniable, it's too late. The wealth transfer has already occurred. The Romans realized it after Diocletian's reset. The Germans realized it after the Rentenmark introduction. The Chinese middle class is realizing it right now. The pattern has never failed to complete. Never. Not once. In 2,000 years of recorded history. Look, this isn't financial advice. I'm not a financial advisor. I'm not telling you to buy or sell anything specific. This is educational analysis of historical patterns and current events. Make your own informed decisions. Do your own research. Consult professionals. But do it with the understanding that the pattern is real. It's repeating, and time is not unlimited. Let's recap the pattern one more time. 4 stages. Always 4 stages. Stage 1, foundation and trust. The system builds credibility. Takes decades. Everyone believes. Stage 2, expansion and debasement. The system gets exploited. Money supply expands. Elites benefit first. Middle class feels prosperous but is actually being robbed. Stage 3, loss of control and crisis. The cracks become obvious. Asset bubbles burst. Middle class panics. Elites reposition. This is where we are now, globally. This is where China is explicitly. Stage 4, reset and consolidation. The system collapses or transforms. Currency revaluation. Debt restructuring. Wealth transfer completes. New Stage 1 begins on a different wealth distribution. Rome executed all 4 stages. Lost 99.5% of currency value. Middle class destroyed. Wealth consolidated to elite. Weimar Germany executed all 4 stages. Lost 100% of currency value through hyperinflation. Middle class obliterated. Industrial elite multiplied their power. China is in Stage 3 right now. 65 trillion in middle class wealth evaporating. Capital controls trapping citizens. Currency debasement accelerating. Stage 4 is inevitable. The pattern has never failed to complete. Not once. Not ever. This time is not different. The mechanisms are mathematical. The outcomes are predictable. History doesn't repeat exactly, but it rhymes perfectly. The rhyme scheme is these 4 stages. You now understand something that most people won't recognize until it's too late. The wealth transfer pattern is real. It's documented. It's executing right now. The question isn't whether this will happen. The question is whether you're positioned for when it does. If you understand how serious this is, if this video changed your perspective on what's happening in global markets right now, I need you to do something. Hit the like button. It tells YouTube to show this to more people. Subscribe to this channel because this story is far from over, and you need to stay informed as Stage 4 unfolds. Most importantly, share this video. The mainstream media isn't covering this pattern. They're reporting the surface events without explaining the mechanism underneath. Your friends, your family, they need to understand what's happening. Drop a comment below. Tell me, which country do you think enters Stage 3 next? Because China isn't the only one following this pattern. In the next video, I'm showing you exactly how the US dollar is currently executing Stage 2 of this same pattern. The specific mechanisms, the timeline, the data points that confirm we're following the exact same path, because this story is far from over. The global wealth transfer has just begun.